And we've taken all that time to learn something, and then
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 28th day of February, 2019. I'm told this is the last day of the month. How about that? What day of the month? Never mind. Welcome to the show. So glad you could join us. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're glad to have you with us. I have a chart up of the S&P 500 Emini Futures, as I do. And if you want to see that chart, you can't see the chart, you don't know how to see the chart, you can't go to our homepage at cfrn.net because the site's down, thanks to my good friends at Squarespace and CloudBrick, not sponsors of the show. Yeah, moment of silence for those guys. Now, what you can do is go to youtube.com/CFRN/live. There you will find a live and real-time simulcast of everything that's happening right here, right now. And thanks to the good folks at YouTube for carrying the show. All right, enough of that bell. You get a new bell. Thank you. All right. Sometimes you tune it. Sometimes you get a new bell. All right. What are we looking at? Oh, Dr. Tom Day. That's today, Thursday. He'll be with us about 45 minutes. We may talk to John in the interim period. Of course, Michael will be on to give us a recap of what happened in the live training room today. To everyone who is currently on the trial, on the Logic 247 Emini Alert Service trial, and also the live training room trial, also known as the CFRN Mardi Gras Open House. That's right. We're glad you're on the trial. Now, if you got questions, you have to ask them. We're not mind readers, but we would very much like to answer your questions. If you put them in the chat box, send them in an email, type them into Telegram, we'll get you an answer. Okay, David's reminding me, kind reminder to better help us understand head fakes, potential head fake on the make, ESH9. Does anyone not understand that term or how it applies right here, right now? Great question, and I'll do that. Let me point out that from this swing high to this swing low, we hit a 62% Fibonacci retracement. Bang. 30-minute candles. Bang, bang, bang. And so then from this low to this high, all right, everybody see this? From this high to this low, 62% Fibonacci reverse fib, because we're pulling from the high to the low. Now let's go from the low to the high. The low to the high. And what do we do? Spike that 62% from the low to the high. Pull back to the 62% Fibonacci retracement. Spiked it, spiked it, spiked it. And now we've started another climb up out of there. Are we saying we can pinch it down, pinch it down, pinch it down? Yeah. So you're just looking at the last leg, or in this case, the last attempt at a leg, all relative to the time frame that you're observing. Daily, weekly, monthly, hourly, by the minute. So from this low to this high, where's the 62% Fibonacci retracement? Right here. If we pull back to that, and just think about this for a second. If we pull back to that, in your mind, would we get a bounce or no bounce? Bounce or no bounce? You could just guess, yeah? Okay. Are there any mitigating circumstances? Is there anything going on that we should also know about? Let's see. Let's see about that. All right. Now, right here is a weekly trading zone from last week. I'll get rid of this one. Oh, we are in now officially popper drop day 3. Okay. All right. So this morning, when I posted that into the channel, potential head fake on the make, ESH9. Does anyone not understand that term or how it applies right here, right now? Okay. We had a bullish cross. Price got above the BBC. Now, when that happens, you've heard me say it many times, we expect higher prices, right? Okay. But that would be at the luxury of discounting every other market truth that exists right here, right now, in this market. One truth is that the weekly zone from last week, 91.92, has been an incredible sticking point for the market. What do I mean by that? Okay, price traded up into this area and stuck. We popped, came back, popped, came back, right back into that, right back into the same spot. Look where the bearish cross was. Look where the bullish cross was. Look where the pullback was. Look at this little guy. Sticks his hand way up just so he can touch that area, and then back down, right? And then look where that bearish cross is, right? When I say a sticking point, do you see how it's a very sticky area? Price just keeps coming back to it and coming back to it. Now, one of the last, let me address the head fake first. So as we come up and make this bullish cross this morning, okay, here's the 9:30 opening candle, right? So I understand that we have this area overhead that's been a great sticking point. It's what the market has sort of hinged off of each time it makes a move, right? And so as it pulls up into this area, I have to anticipate that it may do the same thing, or it may act as good resistance until it proves otherwise. Okay. Now, this trend line that you see here, that was taken out. It held temporarily on a pullback, but then it failed. So what do we have to do? We have to take this, we have to pull it up here. Doesn't mean our trend line was wrong. We didn't do anything wrong. The market dynamic shifted. That's all. A shift in the market dynamic. Now, did I get that perfect? Did I draw it just right? Doesn't matter. I mean, as long as you're basically coloring within the lines. Let me shrink this up. Yeah, let's do that. All the way back to the Sunday night Globex Open. Right there. So from the bottom of this price channel to the top, to the bottom, to the top, to the bottom, to the top. This time we got back to the middle. Remember, when you go back to the middle, it's a 50-50 chance, a gamble, all right, which way you're going to go. So you got to wait for the market to show you which way it wants to go. Let it show you what appears to be the path of least resistance. Now, when we came up out of this zone right here, and we're running right into this area, okay, and the 91.92 here. Let me do this. Here goes 92, and I think we'll make it, I think we'll go with a lovely purple with Easter coming up. Note to self, get Easter bonnet. Okay, of course with all the frills upon it. Yeah. All right, 27.92. And 91. Okay, I'm going to blow this back up for a minute so you can see it real good. Okay. Now we understand this trend line, why it's there. We also understand the bottom of the trend of the channel. Why? Because that's an exact parallel of this line. An exact parallel. That's important. What you do is you click, you highlight, Control C copy, and then Control V paste, and it gives you a trend line at the exact same angle. That's very important. That's the only way you can make a channel. Okay. How many touches does it take to create a trend line? 2. A channel, 3. Okay. All right. So now I'm going to zoom back out, shrink it down. I just want to make sure that you can see the importance, the key role that this 91.92 played this morning. So as this thing moves up and pulls back, all right, understand that most traders out there don't have the benefit of these zones as a backdrop, which means they also don't have this purple zone from last week understanding that it is an area that the market has responded to. Now see, I didn't set out the week going, I think price is going to respond to the 91.92 pretty good in the zone from last week. No, that's what the market revealed. The market revealed that there's something about the 91.92. It just can't get away from it. And so as we pulled up this morning, got that bullish cross. I'm all about the bullish cross. Love the bullish cross. Love the pull away, the pull back, the up close, and bang, right? Except there's no bang because, well, we crossed. We never pulled away. See, all these candles are touching. They're touching the BBC. They're touching this weekly zone here. And when they're not busy touching this zone, they're up here touching this area and this trend line. Now, this is the most convincing move we've had yet. No, now this one here, see this candle, the high 27.93 1/4. But look what happened. Got its head chopped off before the end of the 30-minute candle. All right, now we're at that same price, 27.93.75. 27. No, I'm sorry. The high of this one was 27.93 1/4. This one is 27.93. So we've taken it out by 2 ticks. We got 7 minutes left in the life of this 30-minute candle. Could this end up looking like this? Yes. Could it end up looking very different? Could it actually close above? Yes. Would that be a bullish indication of a potential change in the narrative? Yes. All right. Before I get too far into that, let me back up and say right here, hey, bullish cross. Some of us in our mind, we're already seeing that pull away and the pull back, the up close, but it didn't happen. So that's a head fake. That's borrowed from a boxing term, which I'm assuming everybody knows the meaning of head fake in boxing, but that's how it loosely translates here. Because of the bullish cross, it looked like we were going higher, but we knew there were very real market truths that would hamper the progress of that upward move. Turns out our narrative became the market truth. Now, let me point this out. We've already covered in depth that you cannot predict what the market is going to do next. Give it up. All the indicators and gurus in the world aren't going to change that. The litmus test is try to change the past. The day that you figure out how to change the past, then you can know the future, and I want to talk to you. We'll have coffee. We'll have several coffees. We'll have a coffee every morning, okay? Now, since you can't know what's going to happen next, well, what can you know? You can know based upon your understanding of the market, your understanding of technical analysis, the tools that you choose to use, and trust me, more tools is not better. Okay, just get to know the tools you have, whatever they are. Just get to know them real well. Okay, so your job, since you can't know the future, is to determine, based on your understanding, what the highest probability movement of the market will be next. Not a guess, not a gamble, but the highest probability that if I go, okay, why is that a high probability? You can walk me through it. Ba-boom, ba-boom, ba-boom. See, I felt it was a high probability that the market was not going to continue higher right here because I knew all the pressure it had to deal with. Is it attempting to do the same thing again? It is. Are those same elements, those same conditions that turned it down here, are they still in play here? They are. So I expect this to be good resistance until when? Until it isn't. Okay. If the market pops up here, I'm going to buy it as we race up to 99. Most likely no. However, a close up in this area that then pulls back into this area like this, I then become interested in trading that up to about 27.96. Now, here's the thing. So see, that's okay. That's if we get a positive close here. I want to see the pullback. I want to see it hold, and then I want to take the ride. All right. That's my bullish narrative. Now, if this is too much resistance for the market to power through right now, if in fact it should roll over and head lower, do I have a narrative for that? Yes. It's not quite as important right now because where's price? Price is above the BBC. Okay? So, yeah, you know, in the greater scheme of things, I'm going to anticipate failure till proven otherwise. And we already have an alert in the channel to deal with this if it fails. And I can tell you that dealing with it is not done in this area. Why? Well, look. You don't want to get chewed up in that. If the market does anything to the upside that doesn't comply with the narrative I just gave you, in the narrative, that's my understanding of the market. Right here, right now, in this moment. Not some forward-looking projection, but just right here, right now. I see the energy in the market being expressed. It's going to pop. Could it pop and race 2 zones? It could. Does that comply with my narrative? It does not. Therefore, if I participate in that, am I trading or gambling? Not rhetorical. Once I determine, and if you're a partner or passport holder, and if you were in that discussion group this morning, well, you learned some good stuff, I think some stuff that's really going to help you. Now, a lot of it, you know, it'll be a week from now in the shower, you'll go, oh, now I get it. And you'll be drawing little things with your wet finger on the shower wall to look at that and go, oh, yeah. See, that's how it works. So I just put it out there, and then you digest it, dissolve it, deal with it, and integrate it into your way of thinking over time, if you find it to be a valid truth. See, everything I say to you may not resonate and may not become a truth for you. The things that I think you need to overcome your preconceived notions and let them become market truths, you'll hear me say over and over until you get sick of it, like important prices, important areas, almost always tested. It's just true. I beseech anyone to break out any chart of any market on any time frame and just show me where that's not true. You know, I mean, that's a moot point. It's just the historical fact. That's what the market does. So if we understand that and embrace that, can we use it? Sure. It becomes a tool. It becomes part of our arsenal. It becomes an arrow in our quiver. All right, we got a new candle. Okay. If it takes off and runs, what do we want to do? I don't want to do anything yet. This is a green shoot. This is new life. If we go way back to, where were we? Oh, I did infinite on that. There we go. So since here down to here, all the way down to here, suddenly the market's doing a new thing, right? It closed above the trend line, and it closed above this area. Yeah, but it's closed above the area before. So I want to see how it handles this pullback, okay? Does it find terra firma right here, and maybe on the next 30-minute candle start to print green? If it does, I'm really interested. If we pull back, it fails and comes right back down to this zone, I saved myself some grief, right? So once you determine the story, your story, the market narrative, the market that you're observing and the time frame that you're observing, then it's a matter of patience until the market comes along to fulfill the narrative. Now, your narrative is what's happening right now. And your narrative embraces what that high probability thing is next. So once you establish it, dig in, wait for the market to manifest that high probability move. If it manifests anything else, then just watch it. If it unfolds as you saw it in your mind's eye, then you participate because you understand that. Now, will there be a point in time where you can hold two thoughts in your mind at one time? Of course. In other words, you might understand more than one thing. All I'm talking about right now is this pulling back, the pullback holding right here at the BBC and at this area so that we have a shot at a leg up to the zone overhead. That's the only one I've talked about. Are there other potential narratives that are equally true? There is. Okay. What's this high over here? 27.97. What's this high right here? 27.94. Is 27.96 to 27.98, is that not a valid narrative? It is. Now, if I wait for my first narrative here to come to pass, and it does that not give me an opportunity to take advantage of both stories? Combine them into one chapter? Speaking of books, I recommended this to someone in the channel this morning because of an analogy they used. And if you've never read Illusions, hang on. Illusions, The Adventures of a Reluctant Messiah. If you've never read that, it's not a new book by any stretch, but it's a really interesting book. In fact, where's the chat box? Here it is. There's a link to the book. It's a good book. Don't take it too seriously. Just enjoy it, okay? And then, if it sheds some light on anything for you, I'd love to hear about it. Okay, so we know what we're dealing with. Okay, now I just walked you through, unwittingly, I walked you through my narrative, my story of the market. Whatever happens, or most of the things that can happen, I understand, okay? And I'm prepared. I realize that if the market breaks to the downside, I have no interest in the market. None yet. Until, well, check the price on the alert in the channel. It's a trial, so you can check it for free, okay? All you got to do is email Valerie. She'll give you the link. It's that simple. All right, we've run way over our time. We got Dr. Tom coming today. Michael still has to do the recap. Let me give you the numbers real quick from around the world, as I do. And here we go. Start with the Dow. Cash markets. Dow's down 14 points. NASDAQ up 4. S&P flat, and the Russell 2000 down 1.5. Right there, those numbers, okay, primarily single digit except for the Dow. When you look at those numbers, you don't even have to go look at a chart. Pretty much. Now, market's flat. Market flat. We need movement. And that's where a lot of traders will hurt themselves, is because they've now taken on the mantle of trader. So when the market opens, they should be trading. A part of trading is finding. It's just like Mike reads, the name of his company, his website, tradestalker.com. When you go deer hunting, how much time do you spend? I'm not a deer hunter, but I'm just saying, when you go deer hunting, how much time do you spend pulling the trigger? Once after 3 days, and that's after, dousing yourself in deer urine, right? But as traders, man, we just want to be pulling that trigger. You only need one high probability setup a day that makes it to its target. Am I right? All right. Okay. Okay. Back to the numbers. In the commodity basket, crude oil up 28 cents, trading 57.22 last. Gold down $5.10, trading 13.1610 last. In the Asian markets, the Nikkei finished the session down 171. Shanghai was down 12. Hang Seng down 124. European markets, the FTSE lost 32 today. The DAX gained 28. The CAC gained 15. It gives us a red day in Asia, a mixed day in Europe, and because the NASDAQ's positive by 4 points, it's a mixed day here in the US of A. Michael, if you're ready, let's do that thing.
I am ready. Okay.
All right.
All right. Let's do it. Here we go. Valerie, you need to change your name in the go to webinar.
Is that to protect the innocent kind of thing?
Yeah. There's too many Dwaynes in one space. It's 3 of them. Okay. All right. It's 12:37. Let me go and see. No, John's not there. Dr. Tom's coming on, all right. And he'll pop into the organizer section when he does. Okay. Here we go. Good afternoon, everyone. Today is Thursday, the 28th day of February, 2019. It's the last day of February already. If you have not taken a free trial with us, go to the homepage at CFRN.net. Or actually, you know what? If you have not taken a trial with us and you want to take a free trial with us, send an email to support@CFRN.net. Support@CFRN.net. Just say free trial in the header because our website's having problems right now. So send an email to support@CFRN.net. Okay, and we'll get you in a free trial. So I don't need to go through the rest of that because it doesn't apply right now. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 28th day of February, 2019. Made 15 ticks on crude and we lost 8 ticks on the ES. That put us plus 50 on the morning session. Okay, today it took 35 minutes in one trade to get the goal for the day. At that point, we're up $100 a contract. And we took a total of 8 trades today. So we're going to end the month with $2,067.50. That's over 19 days, averaging $108 per day. Okay. That's a little better than last month. On the year now, we're at $4,098. That's over 38 days, averaging $107 per day. 107 per day. And no, I did not see the Squarespace reply. Okay, so let me just minimize that and we'll get into this. This is gold. Okay, today in gold we had 3 break-even trades. One right there was a trend line trade. One right here was a trend line trade. And one right here was a trend line trade. All 3 of them are break-even. During the break, we weren't trending until we got down to here. Okay, then it pulled back up and it dragged the cycle up with it. So there really was nothing during the break. Okay. We missed a bunch of momentum trades here on the euro. The first one was there. The second one was there. They were all winning trades. That one, that one, that one, and that one. All winning trades, and I missed them all. During the break, there was a short right here. And there was another one right here. Okay. It looks like one more right here. And that was it on the euro. It was pretty, excuse me. Pretty good during the break for the euro. Okay, I had a couple of good opportunities during the break. Crude oil, that's where we made our money today. This is where we got our goal for the day. Our first trade was right here. We picked up 10 ticks. And we missed the next 2. I was talking about that one. We missed the next 2 trades. Then we grabbed a couple more ticks here. Put us at plus 12. We missed these 2 trades right here. All the trades that I missed were winning trades today. And there's 1, 2, 3, 4, 5 here on crude oil. We picked up 3 more ticks here to put us at plus 15. We missed that one. And we had a break even on that one. Since then, let's see. Really nothing. It wasn't really trending here, so you can't really take that short. And yeah. Nope. Okay. All right. On the ES, what did we do? We just had one trade on the ES and we stopped out right here. I was waiting for it to start trending. You know, I typically don't like trading when it's near the weekly trading zones because it gravitates toward the zones and it'll oftentimes consolidate there, and that's what it did. It pulled it right back into the zone, consolidated a little bit, and it stopped me out. So I was minus 8 ticks on the ES. Since then, though, let's see. There was a long trade right here that would have worked out. And I don't like it when the cycle's flat in the middle, so I wouldn't do anything here right now either. Okay, that was my morning session. Let's go back here to this. Again, I'm not going to say, if you haven't taken a free trial, go here to apply.cfrn.net to take the trial, because CFRN.net's not working right at the moment, but we'll get it fixed up. Let's see. So we'll go to the spreadsheet. Okay. Today, as I said, is the last day of February 2000. It's February 28th, the last day of February 2019. We made 15 ticks in crude and we lost 8 ticks on the ES. That put us at plus 50 on the morning session. It took today 35 minutes and one trade to get to the goal for the day. At that point, we're up $100 a contract. On the month now, we're at $2,067. That's how we're going to end it for this month. It's just a little higher than last month. That's over 19 days, averaging $108 per day. Go up here and see. Yeah. Interesting. Okay, so on the year, now we're at $4,098. That's one contract, 2 hours per day. One contract, 2 hours per day. So we're 38 days, averaging $107 per day. 107 per day. Okay? Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, I'm just trying to chase down this thing that Valerie just put in the Telegram.
Yeah.
Apparently they don't know what they're talking about. Because everything is as it should be. So, all right. Well, I'll have to deal with that when we get done here. All right. So, recap of the recap.
Today it took 35 minutes and one trade to get to $100 per contract.
Awesome. Awesome. Okay. Now, John was going to jump on because today's Dr. Tom Day. Do you see him?
Okay, let me see. Yep, he's out there. I'll just open his mic right up.
All right.
Okay, it's open.
Hello, John. Welcome to the show.
Yes.
Hi there. How are you doing?
Good. Yourself?
Good.
Not too bad. We are doing quite well today on the NASDAQ. You know, if you look at and let me just go back and look at it's pretty much the same on the S&P. It's a little bit, not quite as strong a performance, but the way this pullback is going on here, it kind of looks like we are poised to go higher here, you know, into March. And as we've said quite a bit since January is such a monumentally strong month that, you know, we've basically gone higher in February, and quite a bit higher. Not a whole lot higher, but and actually notice we're at, Jesus, that's interesting. We hit a double top on the December, yeah, it looks like we hit a double top from where the December sell-off started. So that's pretty interesting. Yeah, wow. So, you know, the fact that we're on the point of, we basically, okay, the December sell-off, which was catastrophic.
What market are you talking about, John?
I'm talking about the NASDAQ. So we went all the way down from 7150. I mean, look at these numbers. From 7150, actually 7170 more like, I think. Hang on, let me give it the, yeah, 7169 down to 58.20. I mean, how about that? That was in December. That is a really, really incredible sell-off. And we bounced back, finished up closing the December at around 63.25 or so. Had a little bit of a retest in January, 61.50, and here we are back to 71.50. So we're up 1,000 NASDAQ points in the month of February. Sorry, 1,000 NASDAQ points in the months of January and February combined. So we've taken back everything we lost in December, which is...
Look at this daily chart. High, lower high.
Yeah.
Another lower high. Another lower high. And if this thing rolls over, another...
Yeah, it's bad. It's bad.
High.
There's no doubt about that. But you know, look, it could test. You know, usually when you start a new month, you're going to get a bit of a test, possibly. But the way it's acting right now, and the fact that the market is actually up here, you know, the Dow's down a little bit, but the rest is, you know, virtually unchanged. But the NASDAQ's actually higher after this walking away from the summit yesterday. I think tells you how strong the market is. GDP came in at 2.6, which is not bad. Probably going to be upwardly revised again. You know, I think the GDP coming in at 2.6 keeps the Fed from being aggressive as well, which is a good thing. We've got, I guess we're going to have the employment numbers on Friday. So if that's that, you know, if that's a big number, you know, 300 plus, 300,000 plus, again, that's probably going to create a new high. We might get above 7,200 on the NASDAQ. So it based on what happened in '87, you know, we had 3 strong months. January, February, March, there's enough momentum. I mean, look, taking out the previous high, which we're right up against there, you see that? Taking out that previous high is a very big deal. And you know, the next stop is all-time highs, sort of getting back towards 7,600. After that, I mean, look, here's a scenario. What if we get up to a double top against the October highs, and then we have a correction back? You know, that's a reasonable supposition. If March turns out to be as good as it gets. You know, yesterday the market took a bit of a pullback initially when this hearing started, and when I think as soon as the Republicans started defending Trump, the market rebounded and didn't act too badly, all things considered. So, and just in this area, it just doesn't look like the market, you know, I think it had every chance to break here in the last couple of days, and it hasn't broken.
Yeah, I know. Yeah, that's true.
Yeah,
can't discount that.
Right, and Google, and look at Netflix and Roku and all these stocks, Apple, you know, they're all acting really well. Remember, you've got a semiconductor. I mean, this is just to sort of remind everybody, you know, if you go back to 19, what would really drive this market higher into an exponential uptrend are probably the casualties, if you like, of the last couple of years. And here's the interesting thing, you know, we made new all-time record highs in the last couple of years, but the semiconductors were not the, you know, you had Intel kind of underperforming, and the semiconductors in general were somewhat lackluster, and the drug sector, you know, the pharmaceutical sector just has not been the leader. You know, it was the leader going, it sort of went exponential into the 2014 high, and ever since then it's really been struggling to, you know, you haven't been seeing a lot of pharmaceutical stocks, biotech stocks making new highs. And today LABU, which is a triple of the biotech the index is up. It's up around 60. It's had a huge comeback from a pullback in the last couple of days. Something pretty interesting happened today with Intercept Pharmaceuticals. It got knocked down. I mean, it was 130 a couple of weeks ago, and it came out with some bullish news. It got knocked down to 90 or so, and today it jumped substantially higher, about $10 higher or something. It's back to 102. I'd probably be buying dips on this thing because it seems like it's becoming a real company.
What's the symbol? INCP?
No, sorry, ICPT.
ICPT, okay.
Yeah, it's got quite a bit of cash. They've got about 400 million in cash right now. They've got they made some pretty good numbers. And look, it's a terrible looking chart in the sense that the way this thing got sold off was just pretty amazing, and it's a very it's a very dangerous kind of stock to be in because it's a sort of stock, it could open $20 higher tomorrow morning and it could probably open $5 lower. I mean, it's just that kind of stock at the moment. So but I think if it can given that gap there, if that turns out to be an island bottom that is left there at under 100, it could be a sort of an anomaly as far as this thing is concerned. And if it starts to recover and sort of claw its way back higher, I would think that would be quite positive. And the day it takes out 130 or so, I think you want to be long because this stock might have some pretty big upside. Remember, it came from $500 all the way down to 50, and it's had a pretty good performance since then. And I'd also keep an eye on Madrigal, MDGL. If can it live to fight another day? It looks like it. You could almost make the case that this is a microcosm of what happened with the Nasdaq over the past 18 years, where the dot-com boom was sort of a lot of promise in there of where the Nasdaq was going, but most of the companies didn't have revenues and things at the time, right? The Nasdaq today is a totally different ballgame. You've got the biggest companies in the world now are Google, Apple, Microsoft, and Netflix, and these other all those companies that are minting money left, right, and center, a huge market cap. So the dot-com promise of 18 years ago has delivered, and I think this stock, there was obviously a lot of promise in the run up to 500. And now this company is starting to deliver, and it's got a huge, this is addressing a problem that is affecting people all over the world, because people who are morbidly obese have this fatty liver problem,
right?
And this is the treatment for it. And listen, their revenues were up a lot. I mean, they were higher than expected, I think. So obviously this company is it's still early stage, but given the enormity of the problem and hopefully the effectiveness of by the way, the reason why that stock jumped to $500 from 60 or 50, 60 or so was they were doing a double-blind study, and this never happened before. Where the half the patients get the placebo and half the patients get the real treatment, right? The difference was so pronounced, the difference was so dramatic, they actually stopped the study because it was unfair to the people who were not getting the treatment. Where if the treatment was so good in that study that it was only fair to stop the study and say, look, if you want to get on the treatment, we'll offer it to you. That's basically what happened. Something like that, and that's why the stock jumped as much as it did. So
that's one heck of a scientific discovery, or one heck of a marketing ploy.
It's a bit of both,
Yeah.
But that. I mean, I don't think it was intentional, but that's the way it was interpreted, and
it certainly had that effect. Now, this stock I have up right now, it's taken quite a trim. Have a look at it.
Yeah, I know, and you know what it is? I think this. For some reason, this Jenny Craig, which is kind of unusual name for a diet plan, if you like, has seems to be dominating that space, and to the expense of Weight Watchers and Oprah Winfrey behind the whole thing and everything. It's just
they
not.
estimate she's lost about $40 million.
Yeah,
worth,
yeah,
which of course is not going to take any cheese off her macaroni, but just
it's you know, it's a catastrophic decline by by any measure, and it doesn't, and it kind of looks like it might hit new lows. So you know, it's a tough thing to get out of. And maybe, and you know, look, there's so many, the mass advertising of food today, you know, McDonald's and all these places and everything is just probably just people are just abandoning these diets. You know, they're just sort of you know, they're giving up kind of thing. I'm not sure, I haven't looked at Nutrisystem yet, but they're probably getting hit with the same problem. I think
every point in history has its
associated
diet fads. The one right now that's been around for a while, you know, for a long time, it was the Atkins diet, which was a low carb, no carb kind of diet, and they've sort of rebranded that now as the paleo diet.
Yeah,
kind of amounts to the same thing.
Yeah,
I know there's differences.
Put up NTRI there.
NTRI. Now, my wife, who ascribes to the keto theory, she says that most of the time she struggled with hunger all her life, and that just she always feels hungry. But on the keto plan, and as with on the when she did the Atkins thing, she just doesn't feel hungry. And when you don't feel hungry, it sure makes it a lot easier to not eat.
Right,
yeah,
look at the difference. Look at the difference in that chart. It actually went up in the last couple of days.
Mm-hmm.
So that's, you know,
it's climbing a wall of Weight Watcher worry.
Yeah. And you know, they just actually started that. You know, that guy who does a lot of infomercials at night. You know, cleaning mops and things like that. Australian guy. I just noticed he's joined the Nutrisystem team.
Oh, really?
So
now Marie Osmond, is she Nutri-Team or is she?
Yeah, she is. Yeah, no, she's very good. She's very good because she's a great-looking gal, obviously, and she lost 50 pounds. I mean, she's an outstanding spokesman.
She's a poster child, yeah, for real.
Yeah. So, and she's very credible, and they've got they've had some huge successes. I mean, with people losing 50, 100 pounds or
look
more.
At this daily chart.
Yeah.
Big gap. That's incredible. From 30 that's a $10 gap.
Yeah.
Almost.
Yeah. So I'm not sure what Jenny Craig's symbol is, but whether.
So this thing leapt on December 10th, December 7th. Yeah, let's see what
I think it's
is Tom here.
Yes, he is.
Yeah. So, the market's picking up here, Dwayne, going into the afternoon. That's pretty positive.
Jenny Craig is JC, by the way.
JC, thank you very much. Hey, Dr. Tom, welcome to the show. It's Dr. Tom time.
Good to see you guys.
Hey, good to see you. Yeah.
Just a quick word on the gold before Tom comes in here. There's a bit of a thing going on here with at the moment. This Newmont Mining, which is one of my favorite stocks, has got a hostile takeover from Barrick Gold, and it hasn't really impacted the price. The price has been kind of knocked down on this stock, but I would be very, very attentive to Newmont, because when GOLD got they announced this merger 6 months ago, the stock was right on the lows back in August, around 60, 61, 62, something like that, and it ran up all the way to 80 before they did this new merger, or before the merger was consummated, and now it's been split to about a $12.50 stock. So that, you know, given what there was such a vigorous up move in that stock when this merger was announced, I think Newmont could be a candidate for something similar. And another stock that's doing incredibly well is Royal Gold, which is kind of at the highs. It's pretty much at a multi-month high now. It's looking, just a second.
Hey, Jenny Craig went private.
Yeah, that's.
It was JC, and then it says here it was September 2018. Let me go back to that. Oh, I can't go back to that.
Yeah, Royal Gold went from 71 back up to 91. So these stocks have had a kind of a.
What are your thoughts on Barrick? This hostile takeover of Newmont?
Well, I think it's probably the funny thing is that Newmont took it got up to 737 from 29.5 and 37.5, and it got knocked down on this. So I mean, it's hard. It's a hard thing to read as to what's going on there. But you know, if there is a kind of what I'm trying to say here today is just keep an eye on it, because if obviously if the price of gold goes back up, which it's trying to right now, it might have hit a point where it might turn up from here. And the reason I'm saying that is because the gold stocks are not giving up much ground. As a matter of fact, Newman is positive, which is a good thing, and so is gold. So the second thing is that if a deal is it's probably going to raise the price if it's gone hostile. So there's a pretty good chance that Newmont might go for $37 or $40 or something like that. And I think if that deal gets done, both of these stocks are going to go higher on that. And I read a piece yesterday from somewhere that you know, all this merger activity is really potentially very bullish for gold. You know, when the big boys start sort of lining up ahead of a new bull market, this is the kind of thing that happens. But there's never been anything like this. This is, you know, it's kind of unusual that these huge, you know, that the leaders of the gold, the leading producers of gold in the world are kind of getting into shape ahead of a potential up move. I think generally bodes very well for the metals. And you know, we're getting all kinds of buy signals on gold and silver and on the metals stocks in general. Most of them are going golden cross buys, haven't been seen for a year or two, and generally speaking, you tend to get a two-year run or more of these kinds of things. So once we once we start taking out 1350, 1340, 50 on the upside, it really might be a runaway move to the upside, you know, because getting back up towards that 1350, 14, if we start getting 1400, 1450, 1500, the impact on gold stocks, the profitability of these gold stocks is going to improve drastically, and they're probably going to react. You know, you're probably going to see a lot of these gold stocks hit new all-time highs. So, and if that happens, then it just feeds on itself, because the gold stocks going like Royal Gold and Newmont going back to their highs is going to be very positive for the metals, and so it's going to be a kind of a self-fulfilling cycle. And you know, with all this extra stimulus going on, where you basically got more or less all the central banks in the world. By the way, they not only bought more gold than ever last year, all the central banks combined. If they continue to do that this year and beyond, it just makes the gold so much more compelling. And then huge interest out of China in gold right now, as well, with the yuan potentially likely to go weaker sooner or later. And the more that happens, the more bullish it is for gold. And we'll be in uncharted territory, because if the yuan, remember, the yuan has been an invincible currency for really from the early 90s or the mid 90s, say, all through about 2014, 15. That's when it started to stumble. You know, that had its first 10% pullback, then it ran up to a new high, and then it's had another 10% pullback. So the Chinese have probably been mesmerized seeing their currency going up all the time along with the growth of the country. And now that the economy's in trouble and they're in a much tougher kind of scenario, it's distinctly possible the yuan could drop, 10% more. And they have to do that because they've got to compete with Japan and Malaysia and Vietnam and all these satellite countries surrounding them that are getting that are making themselves more competitive. I don't know, do you agree with that, Dr. Tom?
Yeah, I was just thinking, I'm working on an article right now about gold, and I was thinking about how when we used to see little tags on things, made in Japan or made in China, people didn't want them. I was on a Cherokee Indian reservation and looked at some supposedly Cherokee-made moccasins and had a made in China sticker, real small, hidden away. So, but now people are looking at it totally differently, and I think China has just let all of this go to its head collectively as a country. They think they're invincible, and so they're not doing the things they know they should do to stabilize their economy.
Who's the greater existential threat at this point, China or Russia?
Economically, China, right? But
militarily,
as far
Russia?
as defense, militarily, I would say Russia.
And how far apart are those two from sitting down at the table together?
Oh, I think that's going to be fixed fairly soon.
There's your Russia collusion. Okay, go ahead.
Yeah.
But what's really funny is that China took its political philosophy from Russia, and then they started hating each other. And there's been this sort of, we're in the same camp politically with communism, where we can't stand each other, dichotomy going on. But if Russia's going to survive, excuse me, economically, they're going to have to make up and, kiss and make up with China, I think.
Okay. All right.
One thing about the gold price,
yeah.
Just like I said, I'm working on an article on this right now. Typically, when the stock market's going up strong, gold suffers and vice versa. So I've been getting a lot of calls from people saying, well, the market's going up and gold's up $100. What's going on? My theory is that a lot of the people that are in stocks right now are gradually moving money into gold, but they don't want to make big moves because they don't want to spook the market. They want to get out as high as possible and then benefit from the running gold. Any thoughts on that, guys?
Yeah, I think that makes sense. My other thing is, look, I think we're at the stage where gold and the markets are going to go up together. You're getting more inflation into the economy, and that's really, and also the dollar does weaken. If it gets, I think the next time it breaks 95 and a half, it might be going lower. If the dollar weakens a lot, it's going to be very good for stocks, and it's going to be good for gold, plain and simple.
Could this hostile takeover of Newmont by Barrick, could that be the beginning of a thing in the face of rising gold prices? And is it something that junior miners should be happy about?
Yeah, they should be, because what they're saying is that the majors are cannibalizing themselves right now, and the next tier is the mid-tier gold miners, and then the juniors in terms of takeover hierarchy, if you like. So look, there hasn't been a major discovery in 15 years. The world is running out of gold. and the same thing with silver. We're the silver, you know, the output in is over the next 5 years is supposed to get cut in half from the gold miners. That's going to have a dramatically positive impact on gold prices over the next 5 years. It fits within our timeline. 23, 24 as being a potential spike high, and you know, even discoveries made today, you know, probably can't come online for 5 or 10 years. So there's definitely going to be a deficit of gold kicking in pretty sharply here in the next few years, and probably, and I think it's just the same way, just going the same way with silver now, and it's already happening with palladium, and it might happen with platinum too. So that's another reason why the metals are probably in their best, you know, have in their best potential shape since the early 2000s.
Now, with Trump's determination to release regulations or reduce regulations and restrictions, does that potentially make the discovery of new accessible gold and silver a higher probability?
I don't think so, because look, it might have some positive impact on that aspect, but
will it give them another run at the tailings?
Yeah, it could do. Yeah, for sure. I mean, look, if it wasn't for recycling of gold, I mean, I think the price of gold would be about $4,000 an ounce today. You know, it would be, the recycling of gold is quite an industry, and there's a lot of recycled gold makes its way onto the market every year.
Yeah, well, the greatest travesty is the paper gold that represents that does not represent gold. It's just a piece of paper. It says so right in the prospectus. GOLD. SILV. Yeah. Go read the prospectus. It says we may or may not actually buy some gold or silver with your money. We'll do what we want, because once you give it to us, it's our money. Hello?
Yeah. And yet people believe that they can actually get, if there's a crash or something, they can actually turn their GLD paper in and get physical gold for it.
I got 10% of my net worth in gold. No, you don't. You've been hoodwinked. Now, it's perfectly fine for an intraday trading vehicle, but it's not an investment. But I digress. Yeah,
I want to show you a pretty interesting stock there, if you wouldn't mind, Tom. I'll just mention this one.
What do you got?
It's called Amarin, AMRN. Take a look at the history of this thing. It's pretty incredible.
What is it?
Going back to 1995, you know, it's on a split adjusted basis. Came from 1,000 down to, you know, 40 or 50 cents. And it's now pushing $20 on the upside. Looks very strong. It might have had an upward split, but they've got a special kind of cardiovascular, they've got a thing called Vascepa. It's a prescription grade omega-3 fatty acid that apparently is doing very good, having very good results with people with you know, heart problems. Mm-hmm. And I just happened to notice the CEO was on an interview with Kramer yesterday, and you know, it was a pretty positive interview. I mean, look, this stock's had an incredible recovery, and
25 to 30 looks like a done deal if we can take out 25.
Right, exactly. And the thing is that as I was saying earlier on, the drivers, look at the base off that thing. I mean, look at it. The drivers of the pharmaceutical, you know, there's a lot of breakthroughs going on, especially in cancer treatments and things. I think Merck is close to making all-time highs here. In fact, it is actually at all-time highs today. In fact, I said on this program a while ago, I thought it would go to 100 before too long. It just hit $81 a minute ago. And Merck has the Keytruda. If anybody's got cancer out there, they should be talking to their physicians about Keytruda, Ibrance, Verzenio, or Optiva, or there's a new one out called, it's got a very funny name, that you know, if you've got cancer, you might be it's not a cure-all for every kind of cancer, but it cured Jimmy Carter's brain cancer, and he's he's got to be one of the luckiest guys in the world that this worked on him, because it actually put this Keytruda product kind of on the map, and people started taking it seriously when that happens, because getting cured of brain cancer is it's almost like a 1 in a million chance. It's a very difficult thing to cure. So there's these immunotherapeutic treatment of cancer is a whole new ball game today, and it's curing. I mean,
because when it comes to chemo, they're using the same chemicals in chemotherapy that they were using in the 70s.
I know, but they're using less. The chemo is actually starting to work. I think these things in conjunction with chemo are working very well, and the cancer rate, death rates are definitely declining. I heard that. That's not. I don't know.
No, you're also down to only 14% of the American population smoking now,
right?
Compared to vastly different numbers just a decade ago.
Right, and that's huge. That's huge, because that was a major cause. So it's these sorts of things, and also heart disease treatments are getting better and better. These are the sorts of things that could really drive drug prices a lot higher, and also with the election coming up, you're going to have the Democrats talking about universal health care and everything, and that's going to potentially drive prices sharply higher as well. So the drug sector could be, I think the semiconductors and the drug sector could be the drivers of this next upswing in the market, just like they were in 1999, from 98 through 2000, when they went crazy, and the semiconductors, I think they actually tripled. The Nasdaq doubled in a year, and I think the semis tripled in that year, or maybe even quadrupled. It was an incredible run. So, and
have either one of y'all looked at electroceuticals?
I don't know what those are.
Well, just real briefly, for thousands of years, medicine didn't change much. They used leeches and potions, chanting, and whatever. The first real big break in medicine was pharmaceutical drugs, especially the antibiotics. That was the miracle drugs. And then the next really big change was the nutraceuticals, using natural things that people have been using for thousands of years. But
yes, I am familiar with that term, but please go ahead.
Medical community. But electroceuticals are, you remember Scotty in Star Trek?
Yes.
He had this little device he would run over people, and it would fix them. Well, electroceuticals are here. I've been using a device for almost 2 years now that is actually going to be used in the next generation of spacesuits for the astronauts, and it'll be in a wearable form. Right now, it's a mat that I lay on, but it just does miraculous things. And
does it have the magnets? Is that it?
No, it's the magnets you're talking about, passive magnets that are in a pad. This actually generates a special signal of electromagnetic energy. But the point I'm making is keep an eye on the field.
Right.
Unfortunately, this company, it's made such a huge difference in my health. If I could buy stock in it, I would, but it's a private company. But Alphabet and GlaxoSmithKline have entered into a partnership where they're investing $715 billion in electroceutical research. Now, when a pharmaceutical company starts investing in its competition, what does that mean? It's like an oil company investing in solar panels or whatever. It means, I don't know if my industry can be around, and so I better be on the leading edge. And so here we have GlaxoSmithKline, one of the biggest, investing in something that will take the place of drugs. So my prediction is that we're going to see surgery pretty much go away, except for trauma. so many of the things they treat surgically now, you'll be able to treat electroceutically. And also, I believe we're going to see most pharmaceutical drugs go away because there won't be any need for them. The electroceutical devices will keep your body in homeostasis, and then it can do what God designed it to do, which is to heal itself.
Interesting. Interesting. And so, how competitive is this space already? Is it big?
It's not really big right now. The device I use, they sold 1.5 million of them. That's a drop in a bucket. But there are dozens of other ones out there, mostly private companies. I keep looking for a really good one that's public that I can invest in.
Now, let me ask you a question. How did Dr. Victor Frankenstein bring his monster to life? Huh? How do you do it?
I don't know.
Electricity.
Electricity, yes.
And as much as that seemed far-fetched, when Mary Shelley wrote the novel in 1818, the use of electrical devices and electricity to treat diseases has advanced significantly and continues to advance. So-called electroceuticals are not unheard of. For example, a heart pacemaker is an example of an electroceutical. That is a medical device that treats diseases or symptoms with electrical impulses.
I hadn't thought about it that way, but that's exactly true.
In addition to pacemakers, there have been cochlear implants for hearing and deep brain stimulation for Parkinson's disease. Vagal nerve stimulation, VNS, is an area of research for autoimmune and inflammatory diseases. And I listened to a podcast yesterday, I think it was yesterday, that posed the question, should this exist? In fact, that's the name of the podcast. So if you go to iTunes or just on the internet, Google "Should This Exist" podcast, it will bring up, and what they were, it's called Halo. Neuroscientist Daniel Chow created a headset that hacks your brain with electricity so you can learn as fast as a kid again. It's called Halo, and it helps you learn motor skills faster. Athletes use it, musicians too. But we're not far from a future when Halo could help anyone master anything. Where will it take us? It's worth the 20 minutes or so it takes to listen to the podcast. But I thought that tied in well with what you're talking about here. Now, they're putting this on the heads of kids that are involved in sports programs, at school, and these kids are becoming, I don't want to call them super athletes, but they're doing well, right?
Mm-hmm.
So, and this product's called Halo. Now, the first version they came out with was for sports, but they're coming out with ones that help you because the electrical impulse stimulates different areas of the brain. Some of them will help you learn languages. You put on this hat, and you put on this Halo if you're trying to learn a language, and you put on this Halo if you're trying to perfect your backhand, kind of a thing. It's very interesting. Again, the podcast is "Should This Exist?" Just Google it. Okay.
You're probably thinking about what if somebody was able to hack into your Halo and turn you into a Frankenstein.
Okay, and that very thing comes up on the podcast. Now, what are the downsides? What are the downfalls to this? What if we reach a point where, unless we have our Halo device on, we don't really feel like we can do our homework, or learn this language, or perfect our backhand? So, at what point do we become no longer fully human? Because, as you know, men and women competing in the same sports because of the whole gender crisis issue, it's caused a lot of consternation. So what happens when two kids show up for the track meet, one of them's going to state and the other one isn't? One's got a Halo on, and the other one's family couldn't afford the Halo. Is it fair? I don't think so. So at some point, we'll have to prove, we have to be like, 51% human, to run in the race. Or do we have to be 100% human? No performance-enhancing electronics. P. Yeah. All right. Go ahead, Dr. Tom.
Okay.
What do you want to talk about today?
I like it when you use big words like consternation.
I keep it right here by me on the wall next to constipation. So,
I'm just a simple country boy. You know, if I use big words, I use words like mountain or elephant. You know.
You can't remember you weren't the last. You can't remember the last time you weren't the smartest guy in the room. Present company excluded, John.
I found a great quote from John F. Kennedy. He had a bunch of scientists, some of the most eminent scientists in the world, at a dinner in the White House, and he said the last time there was this much brain power in the White House was when Thomas Jefferson dined here alone.
That's pretty good.
Yeah, great quote. Well, have you all talked about the doings over in Vietnam and the fact that this bully Elijah Cummings is trying to distract people's attention from it by his little circus?
It was very shameful. It was embarrassing. As an American, I found it embarrassing.
Yeah.
They trot out a bunch of nothing from a guy who's going to prison for lying, of all things. I'm not saying a leopard can't change his spots. I've never seen it happen, but in theory, they can, I guess.
Well, one of the best quotes that came out yesterday was Michael Cohen said, "Well, yes, I've lied, but I'm not a liar." So,
okay.
But the whole idea of this thing and doing it right now was to embarrass the president and weaken his position while he's negotiating something as life and death as nuclear disarmament.
Well, gee, I guess it worked. They must all be very proud of themselves this morning.
Yeah.
Because he walked off without a deal.
You know what? I think the average decent American probably finds this very troubling. You know, even Democrats. This lawyer can turn like that and be disloyal. You know, it's just not the right. It's just not right. You know, that people do stuff like that.
And breaking client confidence.
Yeah, exactly. And he's obviously been put up to it and probably promised all kinds of money down the road and things for doing it. So it's I mean, if you heard some of the stuff that's going on these days, you know, now they're looking. People are alleging that Chapo paid off the Democrats, and the Democrats been paying off the press to get remember when Hillary raised all that money, a couple of $1 billion. I mean, you have to ask yourself, where did it all go? You know, I'm sure they were feathering a lot of people's nests with that money.
Well, Cohen's gotten paid off in another way too. He was facing up to 70 years. He got 3 years. He'll probably be out in a year and a half for good behavior. So he was told what to say. I believe the prosecutors told him, you make this point, you make this point, you make this point, and give us grounds to go after the president. Because he has said exactly the opposite in the past. He said, I would take a bullet for the president. We're good friends. He now says he didn't ever think he would become president, but yet turns out he was out there campaigning for him. You know, just so many discrepancies. The guy's just a total slime ball. And I think Elijah Cummings is just as bad as he is, because there's no way he couldn't have delayed these hearings for 2 days until the negotiations were done in Vietnam. Who knows, but the negative press could have actually affected. Because yesterday Trump was saying that there's going to be an announcement and a signing ceremony, and today that's off. So who knows? You know, these hearings could have weakened his hand over there. It's just a shame that people are not loyal to the country first and their political party second.
Yeah, well said. Well said.
Okay. Well, listen, I better bow out and leave
All right,
you
John.
with Tom, Dwayne. But thanks very much for the invite.
All right,
all the
brother.
best.
Have a great afternoon.
Thanks. Yeah, bye.
Nice talking with you, John.
All right.
Okay. Well, I have a little something about risk that you might like to.
I'd love to. You want the charts?
If you would be so kind.
I would be. Here we go. Okay, and there you have it.
Yeah, no, I'm sure a guy like you, Dwayne, with all your millions, you don't really worry about risk, you know.
Oh my.
But the rest of us do. You know, we have to think about risk.
I
but
worry
it's
about
hard
you
to
little guys
quantify.
sometimes, you know. I really do.
Thank you for your
welcome.
care and
Yeah,
concern.
sure. Yeah, you bet.
But if we're going to talk about risk, we have to have some kind of metric. We have to learn how to quantify it, right?
Okay.
So we usually think of it as risk versus reward.
Okay.
But that's also hard to quantify. I mean,
It is, because one
really-
is a known quantity and the other is an unknown quantity. Or an
exactly.
unknown entity.
And there's so many things competing for our interest as far as investing. Futures trading, which of course you're heavily involved in. Oil drilling deals. The risk is higher there, but you get tax advantages. So you have to balance that off against the risk of losing all your money and but still getting some tax breaks. Currency trading, with the kind of leverage you can get with currency trading these days, you could take huge risks, but then sometimes you can make monstrous rewards. Stock day trading, I think that's sort of going out of fashion. I'm sure there's still some people that do it, but it's really hard to trade against the computers. That in the time that you think about making a trade, they've already been in and out of it, you know. Startup companies, and there's not a week that goes by that I don't get a PPM, or sometimes 2 or 3 or 4 or 5. One of them just recently, coincidentally, was a new way of turning tailings. They thought about calling the company Midas, you know, turning gold or tailings into gold.
Right.
So there's all kinds of wonderful ideas out there. Some of them are crazy. Some of them are going to work.
For those that don't know what tailings are the leftover material when one mines for gold, and it doesn't come out of the belly of the earth as pretty gold bars. So they, you know, it has to go through a process. And what's left over, the junk, it goes on a big heap. It's called the tailings heap. And over time, people have found new ways to address this already mined gold. They know there's still some in there. It's just a matter of, you know, at what cost to extract whatever's left. And they've come up with clever, and some not so environmentally friendly, and, you know, some more so. And so, yeah, go ahead.
Yeah, and usually,
because
the reason
it always. I'm sorry. I just wanted. Let me just. It's very enticing, or it calls to people because there's mountains of it just sitting around all over the planet. You know, it's
and
there.
it's already been dug up.
It's already been
It's
dug.
It's already out.
How do you get it out? How do you get it out?
So many little tiny parts, or so few tiny parts per million of gold in it. So you're right, it has to be cost effective or it doesn't work.
The alchemist mystery of the 21st century.
Yes.
Turning tailings
And by
into
the
gold.
way-
They used to spin straw into gold back in the day, but now it's just tailings. So go ahead.
Right. By the way, we were talking about China and gold.
Mm-hmm.
It wasn't that many years ago that South Africa was the world's biggest producer of gold, and India was the world's greatest importer of gold.
Correct.
Well, now China is #1 in both areas, but that's only what's known. What China reports to the IMF, they've been doing some huge work in tailings, and have generated many pounds of gold, or kilos, it's usually measured in, and those have not been reported. So they've actually got a lot more gold than their reporting. They only report what they actually mine and what they import. All right, people can invest in emerging technologies. That's exciting. If you're a techie kind of person, it's kind of fun. Biotechs, John was talking about, medical things, this cardiovascular drug. I mean, the biotech people are telling us that they're going to invent things that people can live for thousands of years. So that certainly gets people's attention. Somebody comes around and says, invest in my biotech. But the Bible says, don't put all your money in any of those baskets. I talked to a lot of traders that, like for instance, do what you all do and make a lot of money trading in S&P futures or other types of futures. And I tell them, you always take a part of that and diversify. Don't keep all your money in any one basket. And if anybody wants the verse for this, it's Ecclesiastes 11:1 and 2, which in King James language says, don't put all your eggs in the one basket. So if we're going to quantify the risk, we have to ask ourselves the question, what's conservative? I mean, if you ask the average guy on the street, Dwayne, what's a conservative investment? What's he probably going to say to you? CDs, US bonds, money markets. That's usually what people would say. But they're not necessarily all that conservative. Treasury bills and bonds and notes appear to be conservative. CDs, I love this one. I realize our certificate of deposit rates may seem very low, but I assure you they're better than anything you can get by leaving your money under the mattress. Well, that's comforting. Money markets. This is an old slide. I don't think you can get 2.25% right now on money markets, but say if you could get 2, is that really conservative? Corporate bonds, what people call junk bonds, usually you get better returns than you do on the treasuries.
Are all corporate bonds considered junk bonds?
Most people call them that. It's just a general term, just like silver silver coins produced prior to 1965 are called junk silver.
Right.
But it's not because they're junky. It just means because they're not 100%.
Right.
And corporate bonds are considered junk bonds because they don't have the gold-plated pedigree that the U.S. bonds do. That's why they have to pay a higher interest because there is more risk to them. The company could go out of business, but not too many people think the U.S. government's going to go out of business. But
then those people haven't looked at the balance sheet.
Exactly. Technically, the U.S. is bankrupt right now. Now, this is a chart of 10-year treasuries versus the CPI, the Consumer Price Index. It happens to be from 1953 to 1981, but you're going to see pretty much the same thing in any time frame you look at, and that is that inflation is always higher than the interest rates. Here's the next period after that. You see, for a while there, from 09, for 81 through to about 91, that the Treasury 10-year rate was higher than the CPI. There's some reasons for that. But in general, when a bank gives you a guaranteed rate, the only real guarantee is that you're going to lose money, because they're going to set the rate that they're going to give you on the CD, their money market, lower than the inflation rate. I remember during Jimmy Carter's hyperinflation, I was making 18% on CDs. You know, just put $100,000 in the bank and walk away, and a year later, you made $18,000. What I didn't realize at the time was that the real inflation rate was also in double digits. It was around 21, 22%. So typically the bankers are going to give you 3 or 4 points less than the inflation rate. They can't do that now because rates are already so low.
The opportunity doesn't permit it. That's why banks are trying so desperately to reinvent themselves right now before they become, well, they are an endangered species, in my opinion.
Yeah. It's going to be going to strictly online banking because paper money is going away. I was with a friend the other day, and he said, well, I'll get the check. And so we had lunch, and when he went to the bathroom, I went and paid for the check. And when he came back, he says, oh, I was going to pay for that. I said, well, you can get the tip. You know, people do that a lot. You know, I buy the meal, you pay for the tip. And he opened his wallet. He didn't have a penny in his wallet. And this is a rich guy. He had about 20 credit cards, but he didn't have $1 in there. He says, I just don't use money anymore. So, and the government is encouraging that. They're requiring Social Security recipients to use direct deposit. My payroll company, where I pay my employees, I can pay them with a check, but if I do, they charge me more. So I didn't like the idea, but we went to direct deposit for our employees for that reason, because it was cheaper. So there, you know, money is going away, and therefore we're not going to have the need for banks. It's all going to be done electronically. Now, I love this quote. He actually said this. I verified it. Alan Greenspan, the fact that our economical models at the Fed, the best in the world, have been wrong for 14 straight quarters does not mean they will not be right in the 15th quarter.
Well said, Alan. Well said.
How would you like to defend that position? You know, we're really stupid, but there's a chance that we might get smart next time around after 4 years.
We can no more know the future than we can change the past. The best we can do is assemble a high probability model of what the most likely thing is to happen based on current conditions and remain flexible in case it doesn't.
Did you just invent that?
I did. Yep, it was a stream of consciousness thing.
Very impressive. You should write it down and quote yourself.
Yeah, I have to go back and listen to it. I can't even remember it now. But, I'm telling you, man, I got to get some more detail below.
Someplace. I have a good friend that he talks about marketing a lot, and he said one of the tricks is to quote yourself. And I've started doing that. You know, I'll go back when I'm writing something, I'll quote something I said at another time, because who do you quote? You quote experts, right?
Yep.
So, by the way, if anybody out there has a business and you're looking for a good domain name, you can get a domain name now that says .expert. So you could be Joseph Smith .expert.
Yeah, those they came out with all those top-level domains. Did you bid on any of those top-level domains?
I've used several of them, yeah.
No, but when they first released them, you could bid on it and you owned it. Like, you could own .xxx. You could own, you know, .expert. You could get these, and then you have the right to license people to use them if you so choose, or keep it to yourself.
That's very interesting. Well, I wish I'd known about that.
Oh, it was big money. There was big money involved, and so.
By the way, all the original TLDs were based on the country. Okay, like technically the U.S.'s TLD is .us.
Correct. Yes.
But we managed to con the ICANN into letting us have .com, which is the best one. But all the other TLDs come from the country's name. So guess how TV came about? .tv. It wasn't one of these invented ones. It's actually from a country.
It's an island. It's an island, correct?
A little tiny island named Tuvalu.
There you go. Yep.
And the way you would get your TLD is like Germany is DE, because we call it Germany, but Germany in German is Deutschland. So the first two letters. Well, as it so happened, the country that came alphabetically before Tuvalu that got the TU was Turkey. Okay, TUR, and Tuvalu is TUV. So in that case, they skip the second letter and go to the third one. So here's this little tiny island that didn't even have electricity. They to buy a generator, and
the .tv top level domain falls out of the sky and whacks them right on the head.
Yeah, and they're all millionaires now. But before this, I mean, they ate coconuts off the trees. They climbed trees, got coconuts. They raised patches of bananas and whatever. And he had a generator that served the whole island that they only turned on for 2 hours at night. You know, so you could read or listen to the radio or whatever. Impoverished to the max.
What was the movie where the Coke bottle fell out of the sky?
I don't know.
Gary, he's the Prime Minister of Cultural References here on the show. I bet he knows. Let me put my glasses on so I can see the screen. Come on, Gary, don't let me down. It was the one guy that made the funny movies. He worked a lot with horses, and oh God, the Coke bottle fell out of the sky. It fell out of an airplane, landed on the villagers, and they took it as a sign, and so they worshiped the Coke bottle. Oh, gosh, the gods must be crazy. And what's the guy's name behind that, Gary? I knew Gary would be the one to come up with it. You go, Gary. Oh, it's a household name. Okay. I too can Google.
Well, while you're Googling, the way the .tv domain got out there is an entrepreneur went there, talked to the chief, and said, look, I'll make all your people millionaires. You just assign the rights to the name to me. They didn't even know what a millionaire was, but they did understand lots of money, right? And so he's made, there's only like a few thousand people on the island. They're all millionaires now, and he's a billionaire selling the .tv domain. It sells for a lot more than other domains do, you know, so just kind of an interesting side note.
Oh, it wasn't Mel Brooks that did The Gods Must Be Crazy. That's who I was trying to think of, Mel Brooks, but it's a different group of people.
Okay.
Anyway.
Oh, Mel.
Oh, let me, you were just speaking about something that jogged this in my mind. I wanted to ask you, have you watched yet on National Geographic, Valley of the Doom?
No.
It's about the creation of the internet in the 90s, and it's also about a company called Pick something. It was one of the greatest frauds pulled off in the whole internet coming of age era, and so it's done by National Geographic, but it's not it's a quasi documentary, but they made it both a documentary and a show. You got the documentary and the show, and they blend together just seamlessly. And I couldn't. There's 4 episodes. I couldn't wait for them, or is there 6? Maybe there's 6. I couldn't wait for them to all come out because it's really good. And it will walk you back through where you were in the 90s, and you'll be thinking, oh yeah, oh yeah. And so there's all these people out in California, Silicon Valley, doing all this stuff. And you and I, we were just still listening to our Walkman, right? We had no idea what was coming. And what it left me with is that, you know, if I'd have just grabbed any piece of it, right? If I had been of a mind and in a position to just grab any piece of the whole dot-com thing before it became the dot-com bomb, wow, a person could have really done well. And these things are always very evident in hindsight. But watching this thing about Pixar, not Pixar, trying to think of the guy's name who orchestrated.
So what's the name of the series again? Because I want to watch this.
It's called Valley of the Doom.
Of the Doom. And does the documentary verify Al Gore's claim that he invented the internet?
No, it does. It does not. Yeah, he's not in there. Let me just say that.
Very interesting.
Valley of the Doom.
So you're saying that a former vice president is a liar?
I'm sorry, Valley of the... Did I say Doom? I meant Boom. Maybe you said Doom.
Yeah, you said Doom.
B as in the boy.
Boom.
Valley of the Boom. I'm sorry. My bad. Okay. Well,
I had the chance to invest in Bluetooth. I was managing a stock brokerage, and a guy came and did a dog and pony show telling us about this new company that was going to had a technology called Bluetooth. And we were all joking about it, you know, like pirates that'll take and black out one of their teeth, you know, to make them look like a fierce pirate. Think, maybe they put blue on a tooth, you know. We had no idea what it's all about. And he tried to explain it, and we didn't understand it. But if we'd just bought shares in it, which we could have gotten for 25 cents a share. Yeah. Woulda, shoulda, coulda, right?
Yes.
Okay.
I gotta find... Oh, this guy right here. This guy here. Michael Fain, which was not his real name. He was a fugitive running from the authorities in Virginia. He went to California, dyed his hair, reinvented himself, gained a bunch of weight so nobody would recognize him, and then he launched Pixelon. That was it. Do you remember the name Pixelon from in the 90s, from back in the 90s?
No, I don't.
Okay, when he took this company public, was taking it public, he raised like $25 million. Now this guy knew not. He was just you got to see it. You got to see what this guy managed to pull off. Anyway, he raises $25 million from a group of investors. He promptly turns around and throws a party in Las Vegas. Now, this really happened in the 90s. He threw a party in Vegas that cost $16 million.
How does a guy with a fake identity start a public company?
Party. Pixelon. Pixelon was a dot-com company founded in 1998 that promised better distribution of high-quality video over the internet, based in San Juan Capistrano. It gained fame for its extravagant Las Vegas launch party, followed by its sudden and violent decline less than a year later, and it became evident it was using technologies that were in fact fake or misrepresented. Its founder, Michael Fain, who was actually in real life David Kim Stanley back in Virginia, a convicted felon involved in stock scams who was on the lam living out of the back of his car when he arrived in California. In the year 2000, Pixelon began to fire employees and reduce its operation until its bankruptcy. Now, the launch party... No, not that one. There we go. Pixelon launch party. I mean, this is an incredible who's who. Oh, this article's from 2000. Let's see, who all was at that?
I just looked at the clock, Dwayne. We got 10 minutes.
Oh, buddy.
Okay,
all right, here we go. Kiss was there. The Dixie Chicks were there. Sugar Ray was there. Brian Setzer was there. There was a ton of other people. The Who even got back together for this event. And it was all based on technology that didn't even exist. Actually, they ended up using like Windows Media Player to pull it off. Now, this is a company that had tons and tons of employees. And many of them were kind of raising their head going, hey, I kind of think this... It reminded me of Theranos. I just listened to the 10 episode or whatever podcast of the story of Theranos. Whoa, how did that happen? They were actually opening clinics in Walgreens and they didn't have any technology. I digress. Go ahead. You got 10 minutes. Go ahead, Carl.
Scams, Lord. Well, here's one of the biggest scams ever. It's called the Federal Reserve. Bim Bernanke made this statement to a group of economists. The U.S. government has a technology called a printing press that allows it to produce as many U.S. dollars as it wishes at essentially no cost. So,
and he went on to prove that.
Yeah. And what he was saying to the people of the United States is...
But there is a high cost. I'm sorry.
Isn't worth anything. Your money's worth nothing. Not very comforting. So, many people have made this statement to me. The U.S. would never, ever devalue or replace its currency. And I say, really? The U.S. is right now on its third currency. Third.
Do tell.
The first one was the Continental Dollar. And by the way, each of these was personally signed by the Secretary of the Treasury. This was the money we had in the first 12 years of our country when we were governed by the Continental Congress before we got the Constitution. When we got the Constitution, it defined money as silver and gold. And so all of our money from that point on was backed by either gold or silver, and it was called the U.S. dollar. Okay, so it was real. And people got one U.S. They got $1 US for every 100 continental dollars. That's where we get that expression, not worth a continental. A wagon load of continental money wouldn't buy you a wagon load of food. Right. Was one of the expressions for that time. And then, of course...
Neither will a Confederate dollar. But I digress. Go ahead.
Yeah, well, there was a Confederate dollar, true, but technically that wasn't a U.S. currency because at that point they had seceded. But yeah, if you count that, and then we've had 4 currencies. But today we have another fake currency backed by nothing that's just as fake as a continental dollar was, and that's the Federal Reserve notes that you have in your pocket. So,
but it says legal tender.
Yeah, but if you go back, you see here on at the very top, this certifies that there have been deposited in the Treasury of, then go down to the bottom, the United States of America, $50 in gold coin payable to the bearer on demand. So these are demand notes. Yes, they're legal tender, okay, but they're demand notes. Now, do you see anything on this one about that you can demand anything for it?
Nope.
It just says it's legal tender. France did the same thing when their money was just totally worthless. They passed a legal tender law and said, you have to accept this as money, and if you don't, we'll send you to the guillotine. So the merchants that said, I want silver or gold, I want real money, could die for it. All right. So when we're talking about risk and reward, what we're really looking for is high upside potential. Obviously, what we're not looking for is to get high upside potential, have to accept a high risk potential. It sort of evens out. That's not a good deal. We want high upside with low risk, right? Where do you find it? Well, here's 4 key principles if you want high upside potential with little or no risk. If you understand these principles, you can make a lot of money. Number 1, cash is trash. Well, we've just demonstrated that. The U.S. money and the money of all the nations of the world are trash. They're not backed by anything except the so-called full faith and credit of the government. Bullion is better because bullion protects you from inflation. So the lower the dollar or the yen or the euro goes, the more gold is worth. So it's better than cash, but it's not really a great investment because it only keeps you even with inflation. You know, I think I've told the story here about a house that cost $4,000 in the United States, a typical 3.2, 100 years ago, could be bought for 200 ounces of gold. Today, the same house is $250,000, but it's still 200 ounces of gold. It's not because the house has become worth 60 times as much, or for that matter, that the gold is worth 60 times as much. Gold is worth what gold will buy. Gold bought a house 100 years ago and buys a house today. The house isn't worth anything more. It's a newer model, but you know, it still does the same thing houses do. It keeps the rain off your head. So bullion basically kept up with inflation, as did the real estate. So the only two things that I really like for long-term investing are hard assets, and those are land and gold. But the third principle there, investment grade gold grows, it actually grows in real purchasing power. So instead of just going from 4,000 to $250,000 over that same 100 years in US coins, it went from 4,000 to $2 million, or 8 times as much as bullion. And then the final principle is that European IGG, or investment grade gold, rules. Why? Well, because it's a cool play on words. You know, they have rulers over there, and in Europe, a lot of them still have kings and queens. But it also rules in the sense that we use it today. It's a lot better than U.S. investment grade gold, because U.S. investment grade gold over the last 40 years has pretty much peaked out. You're not going to make a lot of money on it, but you can buy European coins for about 1/10 of what a similar coin would cost you in the United States. You know, similar age, similar weight, similar condition, and most important, similar rarity. So if there's only 1,000 of them known to exist, and it's a 1-ounce coin, it might sell for $100,000 in the United States, but in Europe you can still buy it for 10,000. So that's why I like European investment grade gold. European coins have had 100 years of stability. What you're looking at there are the 4 key coins, what are called the flagship coins of the 4 nations that did a lot of expansion, colonizing. Top left is England. That's the £5 note or coin. Top right is the French 100 francs. Bottom left is the Spanish 8 escudos. And the bottom right is the US $20 coin. 40 years ago, they all sold for pretty much the same amount of money. Today, the European coins sell for about 1/10 as much as their US cousins. And the reason is that the US coins are graded using a modern grading system. And we tell all about that, explain how that is in the Gold Education Starter Package. So I won't get into it deeply here. But here's a few statements that are really important. A lot of things are in a bubble these days. We experienced a bunch of bubbles in 2008. Dollar bubble, credit bubble, real estate bubble, mortgage bubble, and so on. These are not in a bubble. If you looked at European coins on a chart, they have risen steadily. The really rare ones haven't had one down year in the last 100 years, whereas bullion has had 10 down years, and of course the stock market's been down 33 or 34 years. Secondly, they're greatly underpriced. You can buy these things for ridiculously low prices. The downside risk is very minimal. What else do we know of that's had 100 years of going up. Now, it didn't go up a whole lot every year, but it never had a down year, and every year it went up at least some. The upside reward is really unlimited. There are some coins that were like 5-pound coins back when they were produced 100 years ago, and they're worth millions today because of rarity and because of condition. So if you buy them while they're still cheap, and we still got a couple of years that you can do that, you can make some huge rewards. So, you know, I've often had people tell me, well, man, I wish I could go back in the time machine. Remember, I was just talking about the Bluetooth, right? And boy, if I'd known what I know now, that Bluetooth would be in every cell phone and every headset and so on, I would go back in time and buy a whole bunch of it. Well, we can't go back in time and buy US coins before they went up thousands of percent in the last 4 years. But in a sense, you can go back to the time machine because you can buy the same type of European coins at literally just a fraction of what we're paying for the US coins. So what about liquidity? All right, that's always something you want to look at when you're looking at risk reward. Historically, rare coins have always been liquid. When these coins are put up for auction, almost every coin sells at every auction. You can put a reserve on it, say I'm not going to sell it unless it gets this amount of money. So sometimes it might not sell. But if the coins are just put up for auction, they always sell. There's always buyers. So in summary, we got low risk, we've got very high upside potential, and good liquidity. So I didn't put this on the slide, but Dwayne has it for you. CFRNgold.com. So Christian Financial Radio Network, CFRNgold.com.
All one word.
Yes. And if you want to take back the presenter mode and show it on your screen, that's fine. I'm done here. But folks, do yourself a favor. Read this Gold Education Starter Package. There's 2 articles. There's several videos that you want to look at. And if you do that, you will be very happy because you're going to learn some things that most people just don't know. If you go through the whole starter package, you'll know more than 99% of these guys that call themselves financial experts, because most of them don't know diddly about gold. All they know is
talking Bo Diddley.
Right. Typically what you get, because see, your stockbroker and your financial planner don't get paid unless you buy their products, right? So they're not going to recommend gold to you. And so they'll say something stupid like, well, gold doesn't pay interest. Well, neither does land. Raw land, does it pay you interest? But it sure goes up in value, right? So get the Gold Education Starter Package, go to CFRNgold.com and get on our webinars. We do them every Monday night. We do 2 different kinds. We do the Christian Financial Concepts webinars, and we do the precious metals webinars. And I think you find both of them interesting. We'll send you an email. We'll tell you briefly what the subject is, who the speaker is, and then you can decide if it's something you want to listen to. If you can't be there because of time constraints or whatever, we do this on Monday nights at 8 o'clock Eastern time. So remember, it's Eastern. Adjust your time zone. And then the next day at noon Eastern, we have the video posted. So it's better to be there live. And actually, I'm going to try to get Dwayne to come on and teach for us because I like the way he teaches. But it's good to be able to ask the instructor questions live. But you can still watch the recording the next day. And you could ask the instructor questions, but he's not going to answer you. So that's what I have for today. Thanks a lot for having me on, brother.
Thank you so much, Dr. Tom. Always a pleasure, and we look forward to next time.
Okay, God bless.
Have a great afternoon.
futures.
Guys, go to CFRNgold.com. That's one word, CFRNgold.com. Learn more about investment grade gold, and you'll know exactly what we're talking about next Thursday. Let's go to our good word for the day. Now, since the beginning of the show, it's a really big show. What did we say we were looking for? We said, yeah, in a perfect world, we pull back into the BBC. Kiss the top of this trend line. Look for this move to the upside. Now, do we have any indication there's a move to the upside afoot yet? No. Is there a head fake right here? Yep. This was a green candle at one point. You might say, woohoo, this is it. Not it. Okay. Now, because of how we've dipped here, if we were to get another candle right now, which we won't get another candle for 13 minutes, but when we do, at the first shoot of green, am I long? I'm not going to plow headlong into this space. Now, on a pullback, if this is in my rearview mirror, I can't get away from it fast enough. But I'm not going to just launch myself right into this sticky soup right here. I know that some people on the trial are like, oh man, I wish there was more alerts. Well, we all do. However, until a high probability opportunity presents itself, there's no alert to publish. I hope that'll get deep down on the inside of you and you can write it on the tablet of your heart. Nothing to do with the trial, everything to do with you and how you trade. You cannot execute a high probability trade setup until the market creates a high probability opportunity. So now your job is to learn to detect, to spot, to see a high probability opportunity and understand it for what it is. Okay. Again, if you're on the trial and you're not in the discussion group, go there because there was some great stuff discussed today. I got to get caught up now that the show's over. And also, if you did not take advantage of the 3-day open house, there's still a day and a half left. So send an email to support@cfrn.net. Valerie will send you the link. You can call her at 949-42-EMINI. Or if you're on the Telegram, just drop by CFRN Client Services. Should be happy to lend a hand. Good word for the day. I say, good word for the day. Today we talk about, if I could only know for sure. 1 Thessalonians 4:17 says this, so we will always be with the Lord. Are you trying to get used to sleeping in an empty bed or making dinner for one? Has the passing of a loved one left you stuck in grief? A spouse, a parent, a child? Maybe you're wondering, where's God? If only I could know for sure that my loved one's okay. Listen, we tell you this directly from the Lord. We who are still living when the Lord returns will not meet him ahead of those who have died. For the Lord himself will come down from heaven with a commanding shout, with the voice of the archangel. And first the Christians who have died will rise from their graves. Then together with them, we who are still alive and remain on the earth will be caught up in the clouds to meet the Lord in the air. Then we will be with the Lord forever. 1 Thessalonians 4:15 through 17. You say, but how can I be sure this family reunion's for real? Because at the cross, a showdown took place. Jesus called Satan's hand. He walked into the dark tunnel of death, turned it into a lighted underpass to heaven, came out triumphantly, and announced, death is destroyed, victory is complete. He had hell death and the grave in his back pocket. At Dan Richardson's memorial service, they distributed these words: cancer is limited. It cannot cripple love. It cannot corrode faith. It cannot eat away peace or destroy confidence or kill friendship, shut out memory, silence courage, invade the soul, or reduce eternal life, nor can it lessen the power of the resurrection. Be encouraged today. God's planning one huge family reunion. I'll see you there. That's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.